back. You're watching NSE FinWiz powered by CNBC TV 18. Let's talk about equities. Now, there is a little bit of confusion very often with people is when they say equities and they say mutual funds. But it's actually, mutual funds are just a vehicle to invest in equities, but people are very confused about that. So if you could shed some light on mutual funds and what are some easy ways for, these young professionals to invest in mutual funds?
Sure. So we often hear people say, I invested in a mutual fund. So like Sumit mentioned, mutual fund is just a vehicle where you basically invest through the mutual fund into either an equity fund or a debt fund or a gold fund, or what we call hybrid funds, which are a combination of equity and debt. So let's just take a little example of the different classes of funds that are available. So if we take equity funds, basically they're divided basically in terms of the market capitalization, of the underlying stocks in the portfolio. So you can have a large cap fund, you can have a mid cap fund, you can have a small cap fund. We can also have index funds, which basically is a passive way of investing, and they invest basically exactly as per the index. We have sector funds, like you guys in the IT sector, so you can have an IT sector fund, a banking fund. You also have international funds, so you can invest abroad via the equity route. On the debt side, we have ultra short-term funds, which basically is good to park your money in for a short period of time, which would earn you a little more than your savings bank. Then you have some income funds. You have something called FMP, which is a fixed maturity plan. After a fixed period that you're going to receive that money, there's less interest rate risk in that investment. And then you have bond funds, which are interest rate sensitive and invest largely in government securities.
Harsh, let's talk about real estate. That's a favorite topic for people nowadays. Is real estate a good investment option in the current state? And there's something called REITs that we've been hearing about. What is that? If you could just talk about that.
See, well, Sumit, real estate is an asset class which has given you good returns. Now, how good are the returns? That is, it's a competitive. Yeah. Now, what happens is, we're not saying that real estate is an investment that needs to be made or it need not be made. Now, it is subject to an individual. Look at a scenario. If you were, we've heard of people saying that I had invested into real estate in about 30 years ago, and today I've sold it for a couple of crores. Now, what is important for you to not get swayed away with the figures that have been thrown at you. Suppose somebody says I sold a property for 5 crores, and I bought it way back 30 years ago at a few lakhs. What you need to do is that you need to take out the returns that has been generated. Sometimes we get too fascinated by big numbers. But when you come down to your returns, you will see that the returns are on an average about 17 to 18%, which has been the case with even equity investments. So what is important is that you calculate the returns that an asset class is given. Secondly, the underlying theory behind real estate is that it's generally people hold it for long term, which does not happen in case of equities. As much as we may say that you should stay invested for long term, you should stay invested for 30 years, that in reality does not happen. We tend to, because it's a liquid asset. So real estate, yes, you can form a part of it. I mean, you can own it. If it's your first house, of course, you need to have it. I would not call that investment at all.
Vijay, I want to talk to you about another asset class that is a favorite for Indians, which is gold. So everybody would have gold jewelry, your mothers, your sisters, if you've seen it in the house. But now trends are changing. People are actually investing in e-gold, or electronically you can invest in gold. Is that a good option?
Basically, there are a couple of ways that you can invest in gold, apart from buying physical gold, of course. There is a gold ETF, or an exchange-traded fund, which if you have a demat account, basically you can buy it like a share, which is nearly equivalent to a gram of gold on the stock exchange. So basically, that ETF will track the price of gold. If you have a demat account, that is an efficient way to purchase gold. The other way you could do it is from a mutual fund. So if you don't have a demat account and you can go to a mutual fund, you can even choose to invest a smaller amount. You can do an SIP. So in that way you can remain disciplined.
Harsh, let's talk to you about financial advisors. Why should they get a financial advisor? They can read up. They're watching CNBC TV 18. They'll go online. They'll get the information. I mean, it'll be like, why do I need an extra cost of getting a financial advisor when I can do it on my own? What's your take?
You have to, possibly consult somebody who matches with your wavelength. Okay, there are a whole set of people with different mindsets. So you need to basically meet people, not just one, meet 2 or 3, and understand where you connect with the financial advisor. And then you need to construct your portfolio. Now, if you look at the cost part, well, if you're going to pay a particular fee, and if you look at the larger picture, and if you're looking at, say, 1,000 rupees is what we're talking about, the example that we used. If you're going to look at 54 lakhs as a corpus, against which you have paid probably 2 or 5,000 rupees as fee, I don't think it is something which is going to be bothering you. But if you look at it from saying that I'm investing 1,000 rupees against which I'm paying 5,000 rupees as a fee, it's definitely going to hurt you. So how do you look and approach your investments? Are you looking at 1,000 rupees or are you looking at building a corpus of 54 lakhs?
Vijay, we've reached now a generation where we're living more with plastic money rather than paper money. So we use a credit card, debit cards, and you're regularly getting a call from some bank or the other saying this is the credit card, take it, low charges, etc. And we get very happy when we come to know, oh, my limit is 2 lakhs. But that doesn't mean that I can go out and spend 2 lakhs. Tell us a little bit about that.
Sure. It's important to be disciplined. It's important to understand that that is just for your emergency, extreme emergency use. If you start revolving on credit cards, it's like a vicious cycle. You know, the interest payments on credit cards are nearly 3% a month, so which is 36% a year. So one needs to realize that, you know, you're investing to, you know, make a return of 12, 14%, and, you know, on the other side, you're revolving credit card payments of 36%. So just think about it, use it a little judiciously, and you should be all right.
Well, you're watching NSE FinWiz powered by CNBC TV 18. This is season 2, but we'll take a short break. Don't go anywhere. We'll be right back.